Welcome to Access a Trader, the #1 community for those who are committed to taking control of their trading in order to achieve success, profitability, and longevity. Thank you for joining us. Here's Dan Shapiro to help you find your edge, master your process, and own your future.
Hey guys, good morning everybody. Welcome to another edition of the AccessATrader.com weekend update show. Hope everybody is having a great weekend. Spring is right around the corner. I can't wait. If you live in the Northeast, it's just so cold and the wind is just absolutely unbearable. So we are looking forward to spring. Hopefully we got about a couple of weeks of nastiness and then things get back to normal. If you are brand new to the channel, guys, do me a favor, just take 1 second out, click a like on the video, share, subscribe if you haven't come aboard yet, and hopefully again I can continue to guide you, right? Can guide you on a day-to-day basis of what we see based on data, not opinion. So let's talk about the data, right? Everything that we talk about is data. It's not what I think is going to happen, because again, nobody knows for sure what's going to happen. You can prepare for things, you can have an opinion, right? But until that opinion gets confirmed, technically, it's just an opinion. And a lot of people continue to trade and not develop the proper way because they're trading the market that they want instead of the market that they have. So let's talk about facts. On February the 24th, okay, on February the 24th, we lost the 50-day moving average, okay? Right around February 19th, we started talking about a potential rounding top. That first couple of weeks of the Trump rally, as we said, as we say all the time, we've been watching the broadcast for a long time. After a while, right, after a while, the last thing you want to do is jump off the 12th floor, because once you start jumping off the 12th floor, you have no safety net, right? If you jump off the first floor, you know, you'll have a bump knee, some scrapes, some scratches, you know, you'll be fine, right? Some black and blues. If you jump off the 12th floor, you probably die, let's be honest. And the market started rolling over. We lost the 50-day moving average. And if you've been just watching the video just in the last month, you knew what was going to happen, or at least I kind of told you it was going to happen. The 50-day moving average is the mother of all, well, second mother, let's call it the stepmother. The stepmother of all moving averages. It's super important. Again, tell me if you heard this before. Above the 50-day bullish, below the 50-day bearish. So if you watch the broadcast just in the last month, again, the warning signals were there. You kind of knew if you watched this broadcast for years and years and years, what potentially could happen. And the question was, we don't know how long we were going to be in the sell cycle, because that's what the 50-day is. That's what losing the 50-day is. It's a sell cycle. We didn't know if we were going to be there for 2 days, for 1 day, for 3 weeks, for a month. Okay. We are now we're basically going on a month, right? We're basically going about a month on this new week. And we lost the 50-day, and the NASDAQ has gotten just destroyed, just absolutely destroyed in that time frame. And we basically went from 523 just in the last several weeks to all the way down to 486. So if this is something that, again, if you're a brand new trader, you don't have the roadmap in front of you, you really need someone in your corner kind of say, hey, this is what's going to happen next, so you don't get caught up in the spin cycle. But this is honestly probably the best thing that can happen to you, because when you see a scenario again, right? When you see a scenario again that there is going to be price discovery or potential price discovery on the 50-day moving average, well, you know what's going to happen next. So let me give you guys from the optimistic point of view. Eventually in this lifetime or the next, right, the bulls are going to reclaim that 50-day moving average. Again, I don't know when that's going to be. It could be, it could be tomorrow, which I doubt. It could be tomorrow, which could be next week. It could be a year from now. We don't know. But eventually when we get back above the 50-day, which is obviously the opposite of losing the 50-day, you want to be long, right? Above the 50-day. That's the start of a trend. You want to be long. So there's something like this in a short-term vacuum is crappy, because, oh my God, I'm losing my investments are dying and all this stuff. But in the long term, it's going to make you a better trader. And that's the whole point. You don't lose, you learn. Right? You learn. So that's the good news, right? The bad news now is more facts. Okay. I continue to hear that we are oversold, right? We might be quote unquote oversold for the last couple of weeks. But again, let's talk about facts. The QQQs are still year over year up 10%, right? That was the whole point of us having the conversation of when we talked about touchdown regression, right? How long can the bulls keep this up? Again, we were up 60% in 2 years. So pullback, again, was something not only helpful, but it, much needed to kind of reset some prices. So the idea that if you're having a long-term topical conversation that we are still oversold, again, I go back to facts. While the NASDAQ, the QQQs are still year over year up 10%. Here is fact number 2. Okay, now we are below the 200-day moving average. So if the 50-day was the stepmom, let's switch it around. Not everybody likes their stepmom. That was the dad, right? Our dad, we love our dad. He helps us. He guides us, right? He bought us the first bike. He taught us how to ride a bike, all that stuff. He showed us how to hit baseball. That's our dad. Forget about the stepmom, the evil stepmom. Well, the 200-day moving average is the mother, right? Is the mom. And we lost the 200-day moving average on Thursday. And we closed, despite the rally back towards the end of the day, we closed below the 200-day moving average on Friday. What does that mean, right? It means the bulls better wake the hell up this week, right? They really do. They really better wake the hell up this week and start reclaiming some levels. Because the longer, if you thought, the build below the 50-day moving average was going to be bad, the longer we stay below the 200-day moving average, it could be really, really bad. Okay. Again, I'm not trying to freak anybody out. These are just facts. Again, for anybody who rolled eyes from the first time I said, hey guys, watch what happens when we lose the 50. Well, I'm telling you, the longer we stay below the 200-day moving average, it's going to be bad. Okay. It's going to be absolutely bad. Here's the problem, right? Here's the absolute problem. The bulls had an opportunity on Wednesday into Thursday, right? You guys remember we had this nice little rally, got rejected off the 5-day moving average. If you go back to, Wednesday's video? All I had to do is, I said, if the bulls can get back above 503.75, 504, we're going to rally back to 510, 511. The bulls had every opportunity to do so. Well, guess what didn't happen? They couldn't do it, right? They failed miserably. And then we had massive, massive moves back to the downside. And the one thing that you keep on seeing over and over and over again is we keep on getting rejected off the 5-day moving average. The 5-day moving average on a short-term vacuum is the shortest term interval, right? Whoever has control of the 5-day probably has control of the next couple of days. So we keep on getting rejected off the 5-day moving average. So that's a problem, right? That's a problem. But here's the biggest problem where I see from the trading aspect. For the first 2-3 weeks, we had phenomenal downside action. I think I can count on 3-4 fingers how many long trades I put on in the last 3 weeks. Right, I know we had the bounce of Tesla off the 200-day moving average initially. We had a 2-day move on Microsoft. If you guys remember, I've been talking about the same, but that's about it. I mean, I just don't buy stocks. There's absolutely no reason for me to buy stocks because every single time you buy a stock, you're buying into the previous day's supply. And I keep on reiterating the point: I have no interest until the market reclaims a previous day's channel to get long. Now, if the market does reclaim previous day's channel, I will be long for that day because that means we have room for the next interval. Again, I've been saying this for years and years and years. The worst markets in the world. If you go back to 2022, again, a lot of you guys, that's only your point of interest. As much as we were going down, we went down 35% on the QQQs. We have pockets of strength, 2, 3, 4 days worth of rallies. We're not getting that right now, okay? And that's the craziest part about it. We're not getting that right now. Here's the biggest problem I'm running into as of data as of last week. So the first 2-3 weeks, phenomenal action. And you know why it was phenomenal action to the downside? One by one, stocks were losing the 50-day moving average. So when they lost their 50-day moving average, they just started to crumble, okay? You just look at the stocks that I trade. Right? Amazon lost its 50-day moving average at 227. Friday put in a low of 192. Okay, just again, this is just point of reference. This is what happened when everything started losing the 50-day. Amazon got destroyed. You got Google got destroyed, right? Lost the 50-day moving average of 188, went only down to 165, right? You got, no matter what stock it is, right? Microsoft lost the 50-day, crumbled from 448 all the way down to 381. Tesla probably got the worst of it, right? Lost 373 off the 50-day moving average and went all the way down to Friday of 250, filling in this nice little weekly gap. Okay, here's where my problem is. Okay, here's where my problem is right now. You guys remember when we have these big rallies and we're rallying for like 2-3 weeks, and I turn around and go, hey guys, this is too far, too fast. Okay, guys, be careful. Remember we talked about a few minutes ago? Be careful buying a stock that's rallied for 3 weeks because it's 3 weeks away from its breakout level, which basically means the further it gets away from its breakout level, the higher probability. Remember, we had this conversation for years and years and years. The higher probability it will get pulled. You will get pulled. Gravity is real. You will get pulled. Yeah, whatever. Eventually you get pulled, right? That's kind of where we are right now. Okay, we have zero sign the bulls are putting up a fight, even despite late day rallies like we saw on Friday. Look, everybody got. If you've been long this market for the last 3 weeks, you're dead. I don't care what you're bought, you're dead. Or you keep on every single time you get an uptick, people start buying calls. It's the same rinse, repeat, rinse, repeat, rinse, repeat. I feel bad for the average retail trader because you're doing exactly the same thing. You're literally punching yourself in the face every single time there's an uptick. That's it. That's the bottom. That's the bottom. Again, who cares about the bottom? Okay, for a stock to go higher, and this is kind of my point, this is exactly what I'm looking for this week. If for a stock to go higher, it has to take out a previous day's highs and build off those highs. So if you want to buy calls on a stock that you think is a bottom, at least wait for the previous day's highs. You have no shot at the stock going higher if it doesn't take out the previous day's highs. You have no shot, right? A zero shot. So at least take that into consideration. But here's the issue, right? Here's the issue. Now I'm looking at stocks that are 3 weeks removed from their breakdown levels, okay? As much as Tesla blows right now, right? Absolutely blows. Again, you can make an argument it filled in this whole gap, this weekly gap at 250. Maybe it's due for a bounce. Okay, I'll play along, right? Again, I'll wait. I'll personally wait for Tesla to reclaim a previous day's channel. Maybe it'll give us a 1 or 2, 3 day bounce, okay? But the point is, the further now that we are from our breakdown levels, you guys notice this, the snapbacks are absolutely violent. Okay, they're absolutely violent. Because again, the further a stock away from its breakdown level, the higher probability it's going to get squeezed back at some point. Doesn't mean it's the bottom. It means it's kind of in the point of there's no point of return. You don't have a safety net. The complete opposite of a stock up 3 weeks away from its breakout level. So what's a guy to do? Number one, the first thing we need to do is send an email to the White House. Stop effing tweeting every 30 seconds. Zendan, right? Zendan. I can't tell you how many trades I took last week. And again, I was short the whole week. Okay, I was short the whole week. I can't tell you how many days I got caught on headlines. And again, I'm not even selling them into weakness. I'm selling in back into supplies after rallies. I can't tell you how many trades I put on, maybe 4, 5, 6 trades, 6 trades. How many trades I put on, and there was a PR, a tweet coming from Trump, a tweet coming from the White House, a tweet coming from this one, something with tariffs. And they squeeze you back, right? Squeeze you back, and then 2 hours later, the stock absolutely implodes. Now, somebody's going to turn around and say, well, Dan, if you know this is just an arbitrary tweet, why not just hold the position? Well, I'll give you an answer to that as well. Because we're so I almost said the wrong word, oversold. But because we're so down on many names that broken down for 3 weeks, they don't need an excuse to rally back, right? Just the same way when a stock explodes for 3 weeks, it doesn't need an excuse to get absolutely murdered. It's called gravity. And the problem is, if you don't use break even as your stop, but if you don't use $1 or so as your out, which again is not a big deal, you can have a complete reversal and you can absolutely destroy you. So if you look at Friday, right? If you look at Friday's action, the market got murdered, right? Absolutely murdered. Headlines all over the place. Every 30 seconds, Trump just doesn't shut up. Okay, and I voted for Trump. Just doesn't shut up. which is making life really, really hard. So you have stocks 3 weeks away from their breakdown levels, okay, that don't need any excuse to rally back. And now you're in a spin cycle of a potential full-blown reversal, which we saw on Friday. So the question is, well, what do we do, right? Well, what do we do here? We're still seeing no form of recourse of stocks trying to rally back. But at the same time, we know we're very conscious that I guess, I don't know, what would be the opposite of buying stocks on the 12th floor? Are we shorting stocks in the basement? I don't know. I don't know if that's an analogy. Maybe somebody can help me out in the comments here. But my point is now, at any point, the market doesn't need a reason to snap back. Again, every microcosmic sell cycle has aggressive rally backs, and I'm aware of that. So I think going into this week, I'm going to use it a little bit different, right? I'm going to try to adjust to kind of the environment. I get Trump is going to be tweeting every 35 seconds. I get it. If I had took a shot for every time he tweeted, I would have been drunk by the open. So I think this week, I'm not going to sell into weakness. Okay, I'm not going to sell into weakness because, again, the snapbacks are just too aggressive. What I'm going to wait is either for the first 20, 30 minutes, I want to see that new candle develop, okay? I want to see that new candle develop in the first channel of the day, at least for the PS60 theory, that 10 o'clock candle. And I want to see if the bulls can actually muster a rally, because if they could muster a rally, yes, I will look for the names that have gotten destroyed, like a Tesla. And all it needs, again, and I'm just using Tesla as an example, all it needs is to take out the previous day's channel to give us a dead cat bounce. So I'm aware of that, right? I'm going to be prepared for that. But if the market cannot rally, I'm going to use 60 minutes supply to short them off 60 minutes supply. So at worst case scenario, if there is a PR that comes out or some sort of news that comes out from the White House, at least I'm literally shorting it into supply. Again, it's not going to be a massive, massive move against me. So it's a tricky, tricky market. We're still in full-blown sell mode. The market has not had the ability to rally, even despite late-day rallies. If you look at the final scoreboard, it's pretty dismal, man. You still had 3% loss in the S&P. The Dow was down 2.5%, and the NASDAQ, again, fell another 3.5%. Are we due for some sort of bounce? I don't want to use the word rally. Yeah, absolutely. Again, that's my point. I'm prepared for that bounce, but until we get it, right? Until we get it, I have zero problems continuing to short this market into small-term bursts into supply. It's getting a little bit tricky. It's getting a lot more violent. The headlines are not helping. But what's the opposite, right? What's the opposite? If you're sitting there as an investor, keep on buying more and buying more and buying more and buying more, yeah, eventually you'll be right. Eventually there will be a bottom. But there has to be a medium here. You have to, especially from the trading aspect, you have to take the information you have on face value and you have to adjust, right? You have to adjust. This is not the same market that I caught this whole 50-day breakdown on Tesla. We're 110 points below that, okay? So at some point, the market has to shift. Your thinking has to shift. And if you don't shift and you keep on selling lows and lows and lows, eventually you will get caught. Or eventually you will have that incredible rip face-off rally. I have to assume we will get a day or two this week at some point that we will have a violent 400 or 500 point rally in the NASDAQ. I have to assume that just because how far we are from the breakdown levels of the 50-day moving average. By no means do I think this is the bottom of the market. Again, who cares if it is? But again, we have to adjust to that. So be careful of selling stock into weakness. Okay, be very, very careful, because a lot of times the stocks are well below their destruction and price adjustment levels, price discovery levels, and be aware of that. And also be aware of the previous day's highs, because if we could get a rally on the previous day's highs, then yes, I do think we have a chance to get one of those 300-400 point moves on the NASDAQ to kind of give these stocks a little bit of a breather to reset for a potential next move up or potential rejection for the next leg down. So yes, trading is not fair. The market's not fair. Life is not fair. You know what? Get over it. This is exactly what it is. Life and trading are only hard the first 100 years. And for what I hear, after that, it gets a little bit easier. So you have to adjust your thinking. You have to adjust your plan. You have to adjust your anticipation of violent headlines that you have absolutely no control of. But guess what? That's the game, right? That's what you signed up for. You might not realize that, but that's exactly the game that you signed up for. So take a deep breath. adjust your environments. Again, always remember, trade the market that you have and not the market that you want. It'll be interesting this week. Let's see what we got. Guys, God bless everybody. Have a great weekend. And with God's help, I'll see you all on the field on Monday. Take care.